For 4 straight days in the Japanese bond market, nothing has happened. And that is really big news. What's up, guys? I'm Nobody Special, and the Japanese bond market is not volatile, it's not dysfunctional, it's not crashing, it's gone. There just isn't one anymore. For the last 4 days, there has not been one single trade in the Japanese government's 10-year bond. Why? Because the Bank of Japan has rigged the market and nobody is willing to play anymore. And with that, we are going to shrink my big melon of a head and check out this article in the Wall Street Journal. Japan bond market sets record for nothing happening. Trading of the benchmark 10-year bond dries up for 4 straight sessions as the central bank keeps tight control of yields. Bond traders to the Bank of Japan, thanks for nothing. For the 4th straight session, none of the latest issue of 10-year Japanese government bonds traded on Wednesday, according to Japan Bond Trading Company. It's the longest streak since March of 1999, when comparable data became available. This has never happened before. The responsibility for making a normally large market wither away into nothing belongs to none other than the Bank of Japan, which on days such as these is offering a higher price for the 10-year bond than any private firm is willing to pay. That means trading between financial institutions, the kind tracked by market data firms, dries up. Since March of 2021, the Bank of Japan has capped the yield on the 10-year bond at 0.25%. In April of this year, it pledged to buy as many bonds as needed every business day to enforce that cap. In other words, promising to pay a high price so that yields which moved in the opposite direction of prices stay low. And this, folks, is known as yield curve control, where the Bank of Japan is printing unlimited money to buy as many bonds as necessary to cap that yield at 0.25%. This is basically the single most interventionist monetary policy imaginable over at the Bank of Japan. And predictably, it's causing problems because what do we say on this channel all the time? That's right, price controls don't work. They never do. They always cause problems. So to understand a little bit better about what's going on in the Japanese bond market and why it's just disappeared over the last few days, I want you to imagine a lemonade stand, all right? This kid has set up a lemonade stand at the street. The kid wants to make a little bit of money here. This kid is the Japanese government. And in a lot of respects, governments are like children, right? They have no concept of the future. They're self-centered. They make a mess everywhere they go, and they certainly never clean up after themselves. So yeah, this metaphor holds up. Now, the lemonade stand, this is your bond market. So the kid is selling lemonade. The lemonade, that's your Japanese government bonds. And the people buying the lemonade, well, that would be your bond market investors and your traders. Well, along comes this kid's rich dad. No, not that rich dad. I'm talking your generic rich dad, like this a-hole here. And besides being ridiculously wealthy and kind of obnoxious, this guy is also one of those helicopter-type parents who just never lets his kids succeed or fail on their own. He's got to inject himself into every situation. This guy here, this is your central bank. This is that enabling parent that no matter how bad the kid's behavior, remember the kid is the government, this guy figures out a way to bankroll it. So he's watching his kid sell lemonade and he steps in and he decides, you know what? I want my kid to be successful. So he decides he's going to support the lemonade stand, the bond market, by overpaying for lemonade. And he pulls out a wad of $20 bills and he starts buying every glass of lemonade for $20. He's propping up the market for this lemonade and driving prices higher. This is exactly what the Bank of Japan is doing with the bond market in Japan. They're overpaying for these 10-year bonds to keep the prices high. And remember, bond prices and yields are inversely correlated, so that drives the interest rate down. And for a while, it looks like this is working, right? The kid is making a ton of money, flush with cash, but the lemonade stand isn't really making any money. It's not successful at all. It's just the central bank of dad propping up prices. Nobody is buying the lemonade because nobody's going to pay $20 for a glass of lemonade. That's what's happening in the Japanese bond market. Nobody is going to pay these bloated prices for Japanese bonds. Not when you can go down the street to another lemonade stand and get a cheaper glass of lemonade. And that other lemonade stand down the street, that's the U.S. bond market. That's where you can go buy U.S. treasuries and get a higher interest rate. Well, to buy lemonade over at that lemonade stand, first you need to trade in your yen for dollars so you can go shop in the other market. And that's why this yield curve control, besides flooding the market with currency in Japan, it's also causing a flight out of the yen from Japanese investors and into the US dollar. And you can see that clear as day in this chart. This is going back 1 year on the Japanese yen as measured against the US dollar. At the start of the year, the Japanese yen was worth about 8.8 cents. Now it's down to 6.8 cents, losing almost a quarter of its value in 1 year because of this policy of yield curve control in Japan. So the net effect is there's just nobody left in the Japanese bond market to buy these bonds. No one is going to pay more money than something is worth. Nobody is going to lock up their money for 10 years to earn 0.25% interest. And because the central bank has pegged the yield at 0.25%, the price of the bond isn't moving one way or another, so there's no incentive to trade in these bonds. The end result is the market for the Japanese 10-year treasury is gone. It's not dysfunctional, it's not crashing, it's not volatile. It's gone. There just isn't a market for it anymore. There are no buyers. Sooner or later, Dad is going to stop buying that lemonade, and when that happens, the lemonade stand fails. And with the value of the yen in free fall as a result of this policy, it's causing the Bank of Japan to get even more involved in markets where they've started selling their U.S. treasuries in order to prop up their own currency, something I talked about in this video just a couple of days ago. Till next time, live small and dream big.